Hello everyone and welcome to my daily report market analysis videos on Friday the 9th of August with me, Richard Perry, market analyst at Hantec. Let's see where markets are sitting today, and it's a fairly much of a consolidation move. We've seen a little bit of a calming of market sentiment in the last couple of sessions. It's interesting that we've seen bond yields which have started to settle down a bit, certainly this morning, settling around 1.7% on the 10-year, 1.6% on the 2-year on the Treasury yields, and that's just helping to settle sentiment to a degree. Equity markets have been bouncing all over the, jumping all over the place, obviously sharply lower earlier part of the week, bit of consolidation, then bang, straight back higher yesterday. A little bit of a slip back early morning today on the S&P 500 futures by about 0.5%, and that is interestingly reflected pretty much bang on the European markets as well. Now this gold move above $1,500 seems to have hit the buffers a little bit. 1510 has been the resistance in the last couple of sessions, and again it's sort of initially moved higher this morning, but only to slip back again to $1,500. So watch that 1,500 round number level, I would say. And also we're looking at oil, which has formed a basis of support today after a little bit of a jump back high yesterday, but it certainly still looks as though selling into strength remains the way on on oil. So we're looking at a little bit of a consolidation across Forex majors. We've seen the commodity currencies just finding a little bit of support, interestingly enough. A little bit of an outperformance on the yen, but nothing too decisive really yet today. And lo and behold, we still see sterling stuck around that 121 big figure level on cable. So in terms of data points today, we've got the Japanese GDP, which came in better than expected actually. Early morning this morning, 0.4% on the quarterly Q2 data, better than 0.1% expected. So a little bit of an improvement there. In terms of other data points today, we're waiting out for the UK GDP numbers, expected to be 0 on the quarterly GDP. We're also looking at industrial production, meant to fall to negative in June on the year-on-year data, and also we're looking at the trade balance of -11, so again a deterioration there. So eyes on the sterling UK data there today. Also looking out for US PPI at 1:30, expected to basically remain as is on the headline, 1.7%, and a little tick higher on the core data to 2.4%. So that takes me to my chart of the day, which is Aussie yen. Now, Aussie yen tends to be seen as a bit of a gauge of risk appetite, and certainly last week into this week, big sell-off on Aussie yen reflected the panic that we were seeing coming through markets, and a little bit of a consolidation actually in Aussie yen in the past couple of sessions reflects that move that we've seen on Treasury yields actually, interestingly enough. Whereby you've seen a consolidation in the last couple of sessions, and is this the beginnings of a turning point? Well, you need to see a lot more from these momentum indicators. Certainly, a little bit of a tick higher on the stochastics, but not decisive. Close to a bull cross buy signal there, but the RSI is still well under 30. And it looks on the, I think on the hourly chart, that market is more in consolidation. Possibility of a base pattern though, and you'd want to see the hourly RSI and the hourly MACD lines staying above their neutral points. Sort of above 45.50 on the hourly RSI, above neutral on the MACD lines. Needs to move above 72.68 to complete a small base pattern, which effectively would then open up a recovery back towards 73.93, that old key low back from June. But you'd still see this market well below all the moving averages, and it would still be just an unwinding move within the selling phase. But certainly near-term moves against the yen, i.e. yen corrective moves, I think would still be seen as a chance to buy yen in the medium to longer term. We still remain positive on the yen on a medium to longer term basis, given the outlook of markets being so negative on an ongoing basis. So a little bit of a possibility of a rebound to unwind some of that selling pressure, but still I think it would be a chance to sell in the medium term. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to my YouTube videos, and also you can go to our website where you can sign up for our trading webinars. Thank you very much.